unforeseen event that you're hit with $100,000 bill, you have the appropriate coverage to take care of it.
Why do I need insurance for? Airbnb covers my insurance.
Visit the property quarterly.
The whole house was flooded.
I bought my house for $400,000 15 years ago. I don't need my coverage to be where it is.
Allstate, State Farm, Farmers, USAA, those alone, and you might know some more, those have all decided to leave California.
It covers you in the event of wrongful eviction,
Really?
libel and slander, and those kinds of things. It's called personal injury coverage.
What kind of damage it could cause financially for you to lower your insurance?
I can't afford both of them, but
Yeah.
there's no way we should give one of these up. The deal's just too sweet.
Entrepreneur, insurance expert, Michael Shehata, welcome to the show.
Thank you. Thanks for having me.
I'm in the real estate and the real estate of mind.
Welcome everybody to the Realer State of Mind podcast. This is episode 4. Today I got a special guest for you, one of my good buddies, entrepreneur, insurance expert, Michael Shehata. Welcome to the show.
Thank you. Thanks for having me.
So man, just want to say thank you. Thank you for coming out here. I know it was a little bit of a drive, so we appreciate your time, my friend.
Of course.
Again, first, I just want to introduce you to the audience. Just tell us a little bit about, besides you being this insurance mogul, tell us, a little bit about yourself. Like, where did you grow up? Where did you start?
Yeah, I was born and raised in Southern California, Pasadena. Slowly moved my way east to the eastern border of LA County. And, after I grew up a little bit, became an adult, and moved a little further south into Orange County. And now I'm in Yorba Linda, so pretty familiar with all of Southern California.
Cool. Yeah, you grew up, I know you grew up you're a Glendora alumni.
That's true.
Yeah, I know you played sports out there too.
Tried to.
You tried to play sports, yeah. So now you're in the insurance business. You began your adult life. I know you didn't take the traditional route. You didn't do like the 4-year degree and all that. I know that's like, the times are changing. 4-year degrees are, I talked about this with Arshawn, one of our past guests, and I don't know. It's not for everybody. And I know you're a guy actually that I can talk about that didn't go down the 4-year degree route, and I think you're pretty successful. I think you're doing well for yourself. You pay the bills. The lights are still on. So,
Yeah, I try to. Definitely still an advocate for school. You have a kid.
Yeah,
I would definitely never tell your kid don't go to school. But you're right. It's not for everyone. I was given an opportunity that most people aren't given before I was done with school, and I felt like that was a better opportunity, better time spent to focus my time and energy outside in this business. And some 13, 14 years later, here we are. Seemed to pan out pretty well.
Damn.
Yeah.
Tell us a little bit about the opportunity. I know you got into the insurance business, so kind of tell us about that path.
Yeah, absolutely. So it actually started with my mom, who's been in the industry for over 40 years.
Wow, okay.
She worked for companies. She was an underwriter. She was she started as a clerk for just a broker. Mm-hmm. So she's done everything from the retail side to the carrier side to claims. So she has a wide array of knowledge. And, she used to work for somebody, and she came home crying one day and just saying, man, I can't do this anymore. I can't work for this guy. And I was a little younger at the time, but my older brother suggested, hey, why don't we just do this on our own? You know all the ins and outs.
Right.
And so
how old was your brother? How old was
he was 18 at that time.
So yeah, still barely out of high school.
Yeah. So that was 17 years ago now that happened.
Okay.
And so they took a leap of faith, and they opened up the agency with nothing, just the two, my brother with the time and the energy, and my mom with the knowledge. I came in a couple years after that, and we kind of hit the ground running, found new ways to market, to get out to new clients, new niches in the industry, what was lacking in coverage, what people needed, and we kind of tailored ourselves that way to be successful.
Nice. So, you guys it's a family business, Bethany Insurance in San Dimas now, right?
That's right.
So I think the name Bethany is a pretty unique name. So I mean, this is was Bethany always the name?
Bethany was always the name. So when we had first applied, we applied with a couple different names, some acronyms, some letters that were kind of near and dear to us from certain people. But we ended up coming up with Bethany, which is it's a biblical name. It's a city in the Bible that Jesus visited. I won't go too far down, but it's significant to us, and it's definitely how we run our business and what
In a Christian-like way, you're saying, or?
Yeah, exactly. We're always honest. We always give people the right tools to succeed, to purchase the right coverage, whether it's through us or not. We find that it comes full circle and people come back.
Right, that's good karma to make the good recommendation. So, I mean, yeah, now that you're in the insurance business, I know that, and you didn't go down the college route, but if you did, or if you did something else, what would Mike Shehata be doing for a living if mom wasn't an underwriter, if
Sure.
mom wasn't doing all that? What would you be doing?
Yeah, I mean, when they opened the business, I was definitely not excited to be a part of it. I actually had no intention of being a part of the business. I continued with school for the first couple of years, trying to do physical therapy, potentially med school. Like you mentioned, I was into sports. I've always been into sports, never good enough to play, but
Yeah, it's okay.
always loved it. So just tried to get my hand in there any way that I could. So that's what I would be doing if I could.
Try to be a physical
change,
therapist.
yeah.
Well, how'd they get you back in?
I took a semester off of school.
Okay.
And so I just went to help out because they just needed another hand in the office. I was just doing some filing and just helping out with paperwork. And then I'm sitting there like, man, there's so much potential here. At first I didn't want to take money from my mom.
How old were you at this time?
I was 18
you're
now.
18.
Yeah. So I didn't want to take money. I felt like they were struggling. The business had just opened. And so I didn't want to take anything away. But once I got in there, I realized I can pay for myself if I work hard enough and do what I need to do.
You're going to make money. You're an actual, you think you'd be an asset. Basically.
Correct.
That's nice. Yeah. Okay, cool. Well, there's this business. Well, now you just got in it at 18 years old and you saw that there could be a lot of money in this business. So, I mean, to the young people listening out there, where is there opportunity for young people entering this business? Is there, what does the future look like for the insurance business in general? I guess?
Yeah, it's ever changing, just like any industry. It is typically an older business in today's day and age.
I heard about that actually.
There's
yeah.
The average age in the insurance industry is over 50 years old right now.
Right.
But it needs that young touch. It needs, the different styles of marketing, the different ways of communication.
Right.
People like to pick up their phone, text, email. They don't want to have a
Yeah.
conversation. So, it's ever changing and it needs that young drive.
But yeah, no, the TikTok generation needs to come out and, join the insurance world. There's a lot of big guys that made a lot of money. Actually, I was just talking, PBD, one of my favorite podcasters out there. He sold his company for, he doesn't want to disclose it, but it's a couple $100 million. And yeah, he's one of my inspirations out there basically. And I know that he made a ton of money. PHP, I think, was the name of the company. They have 70,000 agents nationwide, but there's a bunch of different insurances that can be offered. What do you guys cover at Bethany?
Yeah, our primary focus is residential property and commercial insurance. So that's our main focus, but we offer a wide array of products from auto, life, health, to workers' compensation, all those kinds of things.
Cool.
Yeah.
Well, I know that you said you first got into the business and you saw the money there. Did you have a big break, or do you think was there something that when you got in or when Danny was in there, was there something that changed, that kind of clicked, where you guys went from doing 100 policies a month to 300 or 20 policies to 100, whatever,
Yeah, what clicked was kind of how to go about it. And it wasn't so much of just trying to sell, because it's an industry that's driven by sales and your money's driven by sales. But I realized that with the proper knowledge and the proper, information for both me and my competition, it would put me ahead. And so I learned all the ins and outs of the industry, what's happening with the Department of Insurance at all times, what's happening with, rates changing, carriers coming in and out of the market, and things like that, that really gave me an edge and for people to trust what it is that I'm telling them and not just selling them on a price, but rather on a product and on a knowledge where they can turn when they need it.
Right. So that's how you differentiate yourself from your competition, basically.
Absolutely, yeah.
There was a subject you told me about the insurance business a while back that I'm just thinking of right now, and actually you reminded me, is the Department of Insurance. I literally did not know what the Department of Insurance was. Obviously, I'm not in the business. Can you talk a little bit about how insurance works in terms of so you're saying that, I remember you were telling me that the Department of Insurance sets people's rates. This is to prevent monopolies, I'm sure. But how does the Department of Insurance work to set fees? So when I go to broker A, or if I go to State Farm or Farmers versus this, why are they priced differently, I guess?
Sure.
But can you talk a little bit about that?
Yeah, definitely. So the Department of Insurance is just the governing body that oversees the entire insurance industry.
Okay.
Both carriers, brokers, and consumers all fall in under the Department of Insurance. So any complaints on the consumer side, they can go directly to the department, file complaints about a broker, an agent, or a carrier for mishandling of claims or anything like that. Beyond that, the Department of Insurance regulates premium and pricing across all carriers. And the reason for that is to not create a monopoly and also to make sure that it's priced fairly. Mm-hmm. Okay, it is a state-governed industry, not federal. So it is California individually that we're talking about. But they essentially check financials. They check statistics and certain zip codes. Why is the price higher in this county versus that county? So they make sure that the financials add up so that a company isn't eye gouging, somebody for premium when it's maybe a hard to place risk or something that you don't see every day.
Well, I guess we could talk about now. We could go into the big topic of the insurance business. You're talking about price gouging. Man, we're trying to get policies now for homeowners out there, and it's rough, right? So it's rough out there. So for all you guys that are listening or watching on YouTube, the California insurance industry has, gone to crap basically over the last year, basically year and a half.
Yeah.
So I guess we could start out first with what has happened in California. I mean, is there too many fires, too many claims in general, too many, obviously it's losses for these big corporations, but is that what it is? Just too many losses?
Yeah, it goes back to the financials that I was talking about, right? And so these carriers feel like due to inflation, the cost of materials, the cost of labor, with COVID delays in getting parts for vehicles shipped overseas, things like that, the average price of a claim has risen significantly, but the insurance premiums haven't kept up with that. And so these carriers that have pulled out of the market recently, and we can get into that if you'd like, but they're pulling out because they just feel like they're not making money and they're operating at a deficit. And like any business, you can't succeed that way. And so, they file for rate with the department. The department reviews their financials. And based on that, they, compromise to come to a percentage based on zip code or county on where they can increase their price. And they're just not seeing eye to eye. The carriers are saying, hey, we need this much rate. The department's saying that's way too much. And they can't come to an agreement. And so these carriers have since exited the market or put a block on new business.
Well, some of the major carriers, I wrote a couple of them down. Since May, several large and small property insurance providers have left the state of California. And guys, we're talking about Allstate, State Farm, Farmers, USAA. Those alone, and you might know some more, those have all decided to leave California. I don't know how big their market was. I know Mercury might be another one, just off the top of my head.
Yeah, Mercury's gone. They've since re-entered. Nationwide is not operating right now in the state of California.
So when these people leave, like the State Farms and the Farmers, can they come back?
It depends on how they're filing to leave. So like somebody like Nationwide, they're just on a block bind. So they're just not accepting any new applications, but they're still housing the policies that they have. Mm-hmm. They'll continue to renew. The product is still available in the state, just no new apps. So they can re-enter once they've come to an agreement. But there are certain programs under Farmers and under State Farm that were pulled completely from the state. And so when it's pulled completely, they won't sit on policies you're not grandfathered. So what a lot of people are getting right now are non-renewal notices saying, sorry, we're not offering this product anymore.
Oh, wow.
You have 30 days, 45 days to find a new product before you lose coverage.
Yeah, like State Farm. Another quick note that State Farm has just told everybody that just the beginning of this year, 2024, they're going up 20%. So I guess that has to do with all the claims that we were just talking about. But so you have, obviously you have the opportunity to discontinue your claim. Obviously, you're going to choose another carrier. People get their bill. Oh my God, 20%! What? And they're going to start shop. So you probably are getting a lot of those calls right now.
Yeah, we're getting a ton of calls about rate increases. What's happening to my premium?
Yeah.
I've never filed a claim. Why me? Why not those people? But unfortunately, everybody's kind of tagged together. They're tied together, and we're all paying for each other's stuff in that aspect. So yeah, we're getting a ton of those calls. It's a tough pill to swallow, but it will become an industry standard. So that 20-30% rate that carriers are taking, all the carriers will be taking that rate for them to operate in the state.
Yeah, and obviously you could shop around, but there's not a lot of differences in I guess a good question for people, is it good to shop for home insurance, or is everything within 10% or something?
Yeah, good. It's always good to shop around and see what's out there in the market, because it is changing. Carriers typically file for a rate every 6 months, so there's changes twice a year for every company typically. Mm-hmm. Right now, there are, with the limited markets on property, if you already have insurance, I would recommend staying where you're at, or maybe calling and seeing, is there anything out there? But I wouldn't test the waters too much. If you're a new home buyer looking for insurance, I would go with a trusted source, because the company you're with, no matter how big they are, they could be here today and gone tomorrow. So you want to make sure that you're obtaining the right advice on who's going to be here tomorrow when you need the insurance. Mm-hmm.
And a lot of these policies that we've got recently, they've been canceled after they were binded. So could you talk a little bit about what are these insurance inspectors, I guess, or inspections? They're not allowed to enter the home, right? So what do these inspections consist of? Because I've got people who've called me because we've either, basically the thing is we've recommended them to you, let's just say, for example. Sure. And they call, hey, Bethany canceled our home insurance. What happened? I guess the inspection went out. Yeah, what's an inspection consist of?
Yeah, so the insurance inspection is typically done without notice, on purpose, to the homeowner, so that they can drive around the property, check it out, and make sure that everything looks to be in working order. So they look for things like missing shingles on the roof, or maybe some fascia work that needs to be done on the outside, some paint chipping, cracks in your driveway, anything that could potentially cause a claim to arise. Because they feel like they're underpriced, they're heavily scrutinizing properties now to make sure that looks like there's no risk, so that they can essentially mitigate how much they've been paying out over the years.
Right. Okay, yeah, and I know a lot of people have filed these. I've known people that have got crazy insurance claims. I got a question for you. This is
okay.
Why do insurances pay so much to like let's say my house got flooded? I know guys that their houses got flooded, and then they go rent these mansions that were crazy expensive. Bro, your house is 1,800 square feet. You're in this a nice ass house.
Yeah.
Do they just screw over these insurance companies? That's probably why they're going up. A lot of people, these insurance companies get screwed all the time.
Without diving too far into it, there's a ton of fraud in California. There's a ton of fraud, especially when lawyers get involved. Insurance is made to make you whole again. But people really take it a step further. Oh, I had water damage. Well, I want better flooring now. I had crappy tile, or now I want granite countertops when I had subway tile. And so people try to milk the insurance, and they take advantage of that. And the insurance on the other end of it, from the company's side, it's a business. How much do I have to spend to investigate this claim versus how much is it going to cost me to just pay out what these people are saying? Mm-hmm. And so if it's easier for them to just cut a check for an extra couple grand, then that's what they do, because they don't need to waste the resources on sending people out and seeing what's actually going on. So it's a give and take.
right now. Are you familiar with how insurances actually make money? Like these big companies, do you know? Like besides premiums, is that their only source of revenue, or how do you know?
Yeah, I mean, premiums is definitely their main source of income, but like any company, they have investments, they do other things. A lot of them are in the financial space, like Nationwide, where they have different revenue streams from, life insurance policies with investments or even pet insurance and things like that. But premiums are definitely the main source. Investments are a small thing that they do as well. And then they have people that co-market with them and do things like golf tournaments and other things like that to help raise money.
Okay. No, that's totally cool. Yeah. So obviously, the insurance business is taking a crap on the residential side. Is there anything else we need to know about California besides the residential stuff? Has anything else taken a dip, or is it just the residential? Because I know the commercial sector. In general, the commercial sector in real estate, supposedly that's taken a big dip recently in terms of occupancy, but I don't know in terms of insurance. Has anything happened?
Yeah, I mean, commercial property itself is really being scrutinized the same way as residential property in terms of those inspections that go out.
Right.
And they essentially just want a cookie cutter perfect risk right now because of the cost of these claims. So building material on residential and commercial are virtually the same for the most part. So cost of labor and materials are virtually the same. So on the commercial side, in terms of property, it has taken a dip, just like the residential side. But in terms of businesses operating, like contractors and different restaurants and different things, they seem to be booming. People are going out and spending money, and so.
But have carriers left? Have carriers left the commercial side?
In terms of carriers, yes, but not nearly as many. Maybe just a couple. For instance, Nationwide had shut down for a little bit, but they are now back on as of last week.
It's a commercial carrier?
They're back in as a commercial carrier in the state, so not nearly as much.
So I guess when are things going to get better? What's going to happen in 2024, guys? Michael, Shehata, tell us, the insurance business. When am I going to see a dip in my insurance cost?
Yeah.
If possible, if ever.
Dip? Never.
Dip, or how about I don't even know. Give me a break here. Give me
a decrease in cost we won't see because the carriers are fighting to get more
money
rate. However, the carriers that are around now are not going to be the same carriers that you will see. So you will see State Farm and Farmers, Nationwide, and these guys re-enter the marketplace at that 20-30% rate. So where you were typically seeing a $1,200 or $1,500 premium, you may see an $1,800 premium. But right now, with those guys out of the state, you're probably seeing $2,500, $3,000, $3,500 premiums where they should be in that $1,800 range. So you won't necessarily see a dip from the carriers that you're seeing today, but as the carriers re-enter the market, it'll soften up our marketplace. In terms of duration of time and expectation on when that's going to happen, a timeline, we're seeing the rate pile in every month. It is public information, so you can go on the Department of Insurance and see which carriers have gotten their rate approved when it's going into effect. Now, once it goes into effect, it takes another 12 to 18 months for that rate to cycle through all the policies and for the company to be operating where they need to be again. So if I had to take an educated guess on when this is going to get better, it's 18 to 24 months before we see a softening up. So 2024 is not the year that we will see it, but 25 is our where we're hopeful.
Well, everybody's trying to get a discount on home insurance. A lot of people are turning to the those discount shops like the Lemonades, and I don't know if Bamboo is considered one, but I'm talking about because in the mortgage business, they're online lenders. It's online insurance companies, and they're cheap as hell.
Yeah.
You hire guys, and unfortunately, it is what it is. You hire overseas workers. You pay them less, but that's what everybody in America wants, cheap. So then we keep bringing people from foreign countries to service this. And I know that I think Lemonade is probably serviced like that, but
most of those online companies, Hippo, Lemonade.
I don't know. Is Bamboo's back?
Yeah, Bamboo's back. So there's. Yeah, I mean, those guys...
Is there basically, would it be cheaper to use those companies? And what is the disadvantage of me using an online carrier versus not an online carrier?
Yeah, I mean, at the end of the day, insurance is purchased for when you need it to repair your home due to damages, right?
Right.
So just to get right to it, it's in the event of filing a claim, how is the claim handled with somebody onshore versus offshore per se?
Right.
You know, most of these online carriers, you have to file the claim online. You have to fill out the paperwork online. You know, it's the review process is not nearly as individualized, and so they don't know what you need, what your expectations are. Their turnaround times are typically longer. Your file gets passed from this guy to that guy because this person's not here today.
Right.
You know, where when it's on site, you're dealing with the same claims rep throughout your entire claims process, or your insurance broker throughout the entire process, right? We're there to help you file a claim as well. So those are the differences, really.
Actually, I was actually going to mention that. So the insurance side is we don't service the mortgages. So you guys service kind of your portfolio or your clients. So if I got an insurance claim, or no, if I got an insurance policy through you, would I have to contact with the carrier, or can I contact you guys?
Yeah, so we're a full service agency. So we do everything from billing all the way up to help you filing a claim to making adjustments on your policy and annual reviews of your coverage, and what's needed or what maybe we can eliminate moving forward. Right. So yeah, we are a full service agency.
I like that model. We're brokers, and I support brokers. I go for that model because I pay for service. I'm good on the headache of like dealing with. I mean, me and Chris talk about, what is it? Stop tripping over pennies to pick up dollars or pick up nickels or whatever that saying is. But I'm not out there to save a penny. I want, I don't want to be ripped off, but I want great service at a decent price, which is, I think a lot of people are in that same boat. So for those of you guys looking for insurance, Bethany is a full service agency. So yeah, we talked about, 18 to 24 months, you think it's going to get better. I'm hoping it's going to be, I'm hoping that it's going to be before that, but I guess nobody knows. It's kind of like, just like the interest rates, nobody kind of knows. I guess another quick topic that is in my industry, a lot of people, they don't realize what we do. They don't think it's that hard. Like, oh, what do you get paid for? Like, why are you making money? So... what are some? And I know that you guys are kind of in the same boat a little bit. And what are some? Your job's a hard job, but what are some misconceptions? What are some things that people don't see on the outside that I guess makes your job tough? And first, just really quick, I know that dealing with people, first of all, you could even mention that dealing with people is tough. So yeah.
I mean, you spoke about it. You just touched on it, but customer service is not an easy industry.
Yeah.
It takes a lot of patience and it takes a lot of explaining customer knowledge. Insurance and your industry in lending, it's not common knowledge to a lot of people. People don't know how things work, how things operate, what it takes, behind the scenes to get things done. It's not Andrew working on it takes multiple people to get a file closed or to get something done. So I think the common misconception is what you do is easy, right? Yeah. So it's really educating the client on your value to them, because there is value. In today's day and age, everybody just wants things quick and cheap, like you said.
Yeah.
But people don't know the value until they need to use it. And so we really sell ourselves on what, you're not purchasing anything tangible. So you're buying me, you're buying my knowledge, you're buying my product. And you're going to count on me to guide you and steer you in the right direction when you need it. So I have people that pick up the phone and say, hey, I think I need to file a claim, but I'm not sure. Can you tell me what I should do or what steps should I take? And maybe we put that on hold on filing a claim. And I say, hey, no, check this out or check that out. And because I've been doing it long enough, I've built a network of both people that I insure in-house and people that I just work with regularly for contracting, for home repairs, for other things, and say, hey, call this guy. Maybe he can do it for you, without filing a claim, and you can save the money. Your insurance won't go up. You're not negatively affected. So that's really the common misconception, and that's how we, find success.
Nice. So service, essentially, and, like you said, customer service.
Yeah.
So I know that a lot of people, we were just talking about people that are cheap with insurance. Yeah. I don't know if you could can you think of a story lately or in your whole lifetime or, your whole career of doing insurance? because I'm sure you get a lot of these calls. Can you think of a story where somebody basically they lacked insurance coverage, or maybe they called you earlier and they decided to lower their insurance, and then their house floods, the house burns down, it gets hit by a car, whatever, some crazy storm happens. Can you name? I just want to give an example to the audience about what kind of damage it could cause financially for you to lower your insurance. Do you have any stories?
Yeah, absolutely. Yeah. So I have one recently that is coming to mind. It's an investment property.
Okay.
And the landlord I asked him if he allows the tenant to have pets at the property, and he said, it's not in my contract. So I always tell them no, but it's not in my contract. So anyway. We get a call from an attorney a couple of weeks ago saying, hey, is this your client? We need insurance information. There was a dog bite at the property, and this is the landlord, and we need to, essentially subpoena the landlord because the dog was owned by the tenant and it bit a neighbor. And so the dog was registered to the tenant on the contract. And the landlord, per his contract, is to visit the property twice a year. He was not doing that. He had opted out of purchasing animal liability coverage when I had suggested, hey, if it's not in your contract, you don't know what people are doing. They may not have a dog today. They may tomorrow. Sure enough, he was subpoenaed. Even though the dog was not his, it was his tenant's. He was still, it's in the process right now, but it seems like he may be found negligent for not disclosing it in his contract, not going to the property like it says in his contract twice a year, and he may have some partial fault in allowing that tenant to have a dog. And so that's huge. Nobody would ever think to, hey, my tenant, I need to check on this or that.
Yeah.
But
and that could cost him thousands of dollars, I'm sure. That's going to be probably the dog bite plus obviously the lawyer fee.
Oh, it's a six-figure claim.
Emotional damage.
Yeah, exactly. PTSD.
All that kind of stuff.
Yeah, and then other things, sadly, we see these things all the time of people increasing their deductibles or saying, oh, I bought my house for $400,000 15 years ago. I don't need my coverage to be where it is on the rebuild cost.
Well, now that's what it costs to rebuild.
But that's what it costs to rebuild
it's not
today.
25 years ago anymore.
Exactly. So those are common things that happen all the time. And if you're not insured to value, insurance companies are very quick to say, hey, you didn't want to pay the appropriate premium. We're not going to pay you the appropriate amount to rebuild your home. And so you may have a $50,000 claim, but you're only insured, 80% to what you really should be insured. We're only going to give you 80% of that $50K.
Yeah.
So people lose a lot of money.
Well, you're talking about that what if it was in that contract? So what if I did put the dog what if I put that you are not allowed to have pets, and I visited the property?
Yeah.
I didn't see a dog.
You've done your part and you've checked your boxes and you're not found negligent. But when you're not visiting the property, you don't have a signed agreement that you came on such and such date, and in your contract it doesn't say that you can't have a dog. Well, the dog has a history of biting. The dog has a history of biting because dogs are registered,
right?
So they're registered property.
American
and
so or whatever.
Yeah, exactly. So the dog has a history of biting, and so now the landlord is found negligent for not doing his research in allowing that animal to be on the property.
I guess you could hide your dog, but yeah, it's a bad situation. Yeah, but I have properties. I'm just thinking they can hide the dog from me. I also don't. You're not going inside, are you? Do you expect the owner to go inside the property?
Yeah, absolutely.
Wow.
The owners. So we typically tell our landlords visit the property quarterly. Now that never happens, right? But we always shoot for the stars and see where we end up. So people typically try to get out to their properties once a year. If not, they have property managers. They usually do those walkthroughs. And it is inside and outside walkthroughs. They make sure the fire detectors are working, smoke detectors, carbon monoxide, all those things are in working order.
Stuff, yeah.
Yeah, all the maintenance on the property's done. Some of my landlords require carpet cleanings and floor cleanings just to make sure everything's in order.
Right. I know. So back to insurance, we're talking about. I have a client. I have a story to tell you, and I want to know your opinion about it. I kind of talked to you a little bit about it earlier, but So I got a guy, we got him a mortgage, and his mortgage is impounded. So for those of you, impounded means his insurance cost is included. No, I apologize. It is not, I'm sorry, not impounded.
Okay.
So he has his insurance separate. So he just pays the mortgage with the mortgage, and he pays his insurance company their bill. So because this guy, he's an investor, and he strictly Airbnbs his properties, or short-term rentals his properties. He's like, why do I need insurance for? Airbnb covers my insurance. And I told him, well, first of all, the mortgage company is going to put forced place insurance. To this point, they haven't. The mortgage company has not found out that he's canceled his home insurance. And you know that forced place insurance is usually anything that they could get. It's really expensive. But my main question to you is the insurance guy is, are you anywhere familiar with what Airbnb? He was telling me they have $1 million policy, whatever. I don't even know what that means. So they have $1 million policy. Will Airbnb cover a flood, a fire, all that kind of stuff?
So fortunately, I actually have an Airbnb myself.
Oh, there you go.
And so I am familiar with the insurance policy of Airbnb, and I'm not speaking on behalf of Airbnb, so I can't say that. But does Airbnb cover you? Yes, only at the time that your property is occupied by a tenant from Airbnb. Now, if your roof caves in because you have not replaced your roof in 25 years, Airbnb is not going to cover that. That's a wear and tear issue, and you need to take pride in ownership. And if your tenant gets injured because your roof caved in on them, Airbnb is not going to cover that. Right. There's some negligence there on the owner. However, if the tenant trips over furniture, or if they trip coming up and down the stairs and they're injured, or maybe they hit something on the way in or out, those things are covered by Airbnb. If the tenant damages any of your furniture, those things are covered by Airbnb, up to $1 million. So there is sufficient coverage there while the tenant's there. But there are other things that you need to be aware of. If there's a natural flood, like you asked about, if there's a pipe burst in my property while a tenant is there, Airbnb is not going to cover that. It's a pipe burst internal from your property, that's your pipes that you own. If your tenant busted your pipe, or something happened maybe while they were in the shower or using the sink, sure, Airbnb will cover that. But 9 times out of 10, those leaks, those things happen inside the walls. You don't know what's going on. That's your primary home insurance.
And you're going to have to prove that was this Airbnb tenant who busted this sink pipe. Like we went to dinner one time, like way back in the day, at an old house that we used to have. We turned on the dishwasher, and the pipes in the back of the dishwasher just burst, like one of the big pipes.
Yeah.
I'm opening the door to the garage. Actually, I could already see water, from the garage door to the garage. There's already water coming out.
Yeah.
The whole house was flooded.
Yeah.
So a situation like that, Airbnb, that's not the tenant's fault. The tenant just turned on the dishwasher.
Exactly.
Yeah.
Not going to be covered by Airbnb.
Yeah. So honestly, I'm going to talk to you after this. You heard it from him. I kind of knew it. It just doesn't make any sense. Like Airbnb is going to cover the tenant. They're covering literally the tenant that's coming in, what Airbnb gave you, which is a tenant.
Exactly.
And they're not going to cover,
they're a business just like any other. I mean, they're there to make money. If they're sitting and paying claims for this or that because you're not taking care of your property or you don't have the proper coverage, they're not going to be a business anymore. So you always got to look at it that way.
Yeah, no, that guy's he's trying to save everything he can save.
But insurance for Airbnb is not so much more expensive than a regular insurance policy.
He has a regular insurance policy.
Yeah, I mean,
so he canceled that just to save. At that time, it's probably like $150 a month or something, and he's making, he's raking it in on Airbnb, so it's like not a big deal.
Yeah, not worth the corner to cut on that one.
Yeah, so you would never do that with one of your properties?
So okay, I'll give you an example. The Airbnb I have is a condo, so maybe a little bit different, but there's an HOA, and the HOA recently came out to inspect all the walkways, all the balconies of all the units. There's 26 units. 24 of the 26 balconies need to be replaced due to water damage. All the walkways have termite and water damage. So the HOA is now assessing the cost to replace all the balconies, all the walkways, and the elevator to all the unit owners, 26 unit owners.
That's a ton
That
of money.
project is going to be somewhere between $2.5 and $3 million. That's now going to be assessed to 26 units. You're talking about $100,000 a unit that's going to have to come up with this cost. Well, thankfully for me, on my insurance policy, I have coverage for HOA assessment, and my insurance policy is going to cover $100,000
What?
of that assessment from
wild.
the HOA. So you have to make sure you have the appropriate coverages. You have to make sure everything's in order.
Oh, that's
so
genius.
in the unforeseen event that you're hit with $100,000 bill, you have the appropriate coverage to take care of it.
Yeah, we just had at the condo that I own that we had an incident like that, but it was really small. It was like $600 or $700 a unit.
Yeah.
How are people paying for this?
So the HOA is financing interest-free for 12 months in our scenario, but after 12 months, you have to pay them off.
That's $8,000 a month.
Yeah.
Or that's to do 100, right? Yeah, it's $8,333 a month.
Yeah, exactly.
And who can afford?
Assuming it's actually $100,000, we're anticipating 110, 120,000.
You said it's balconies and elevators and walkways.
And walkways.
It's like a whole.
It's a huge
complex
project.
Renovation.
Yeah, it's a huge project. So.
Man, you're responsible for other people's balconies on condos, huh? Wow.
Yes.
It is, yeah, because it's a tenant community, or not, it's a tenants in common kind of, or something like that.
Yeah.
It's something like that.
And because there were so many of them were damaged,
they're
just replacing all of them.
Yeah, so I know you just started talking about that condo. I want to dive a little bit into your real estate journey and, kind of, I guess, how you got into real estate. At 18, you started the insurance business, or you started working in the insurance business. When did you start thinking about, long-term assets or real estate in general? When did you start thinking about real estate?
Yeah, I mean, it wasn't for several years into my journey. I mean, for financial reasons and really just lack of knowledge in investing. But the cool thing about the insurance industry is I see all different kinds of industries. And I noticed that a common value that all successful people have is real estate. Everybody owns some kind of real estate that's financially successful. And so I just thought, how can I do that? What can I do to jump into it? And so funny story, first investment that I had is actually my brother was looking for a primary home for himself. And he put an offer on 2 properties. Turned out they were both accepted. And he had put some lowball offers on these properties. And they both accepted the offer. And he's like, oh my gosh, I can't afford both of them, but there's no way we should give one of these up. The deal's just too sweet.
Right.
And so we kind of put our brains together and said, okay, well, what can we do with the other one? And so he picked which one he wanted to live in. The other one, we said, you know what, let's see if we can just do a quick cosmetic renovation and jump back out of the property and take our money back out, because we didn't really have the money to hold long term. And so sure enough, we did. We closed on the property. We rehabbed for a couple of months, not really knowing what we were doing. We relisted the property. Knock on wood, it was a successful flip for us. And that kind of kickstarted it. So we were thrown into the fire. We really didn't have a plan.
And how long ago was that?
That was in 2016, April of 2016.
Okay, so a while ago. So yeah, that was kind of throwing you into the fire. How did you choose the right contractor? I know contractors are a big thing now, or it's always been a big thing, but it's a big thing in a rehab project. How did you get the right guy?
So like I said, the cool thing about my industry is we work with all industries. So, I actually know these contractors on a personal level because of doing business with them for so long. And so you see how people operate. You see whose employees are happy with them. And you see, when a business is going well and their employees are happy, they're typically a good business. They have good customer reviews, no claims and things like that. They take care of themselves. So, we're blessed to be in an industry where if I need a contractor, I have a list of them, or if I need, a specific electrician or roofer, I have a ton of people that I can contact.
Nice. So what is your long-term strategy in terms of real estate, besides owning the world? No, I'm just kidding. But besides, do you have any type of strategy, in terms of what's your, you're still young. You got a while to work probably, but
I have a long time to work. Strategy, the goal is really to pick up one long-term hold a year for now.
Okay.
Hopefully that number will increase.
Yeah.
But rental properties, real estate in California is always appreciating. So
Right.
when people are saying, oh, it's peak market, it's this, that, it doesn't matter. If the deal works and it makes sense and you're getting return on your money, then we'll make it happen. In fact, my brother and I just closed on a duplex in Riverside just last Friday, so just before the end of the year.
Congratulations.
Thank you, much appreciated. And so that was our one. We caught it right at the end of 2023, but we'll look in a few months to jump into our 2024 long-term investment and hopefully continue to grow our portfolio year over year.
Nice. So one property a year. We got to get you bigger goals than that, man. I know you could do it.
That's the realistic financial goal right now.
I know it's expensive out here.
But finding the properties are difficult.
Yeah, that's another. Yeah, how it is difficult. So what did you guys do, or what are you guys doing?
Yeah, I mean, again, we have a list of realtors that kind of are out there just
people that you know through the business.
Yeah, through the business that are searching the market in certain areas. We don't want anybody to cross over boundaries, and so people look in certain areas where they're familiar. And so, this guy in Riverside is familiar with Riverside, but we have a property in San Jacinto, a property in Whittier. These are coming from different sources, so someone's always on the lookout for us.
So I know you have all these rental properties. Before we end, let's briefly. I just want to talk about rental insurance. Is there something that people should look for in rental insurance? I know that. During COVID, there was the forbearance where a lot of people were making their payments. What can I do to cover that? And then also the flooding and stuff like that. So when my place floods or if my place does burn down, don't I have to pay for my tenant's
relocation?
That's another probably, feature on an insurance that people might not get.
Yeah.
that you might want to talk about. Yeah.
Yeah, definitely. So quick, I'll touch on two things very quickly. So the first thing is, what should you make sure that you have all the time?
Yeah.
You should make sure that you have personal injury coverage. And contrary to what it sounds like, it's actually not bodily harm. It covers you in the event of wrongful eviction, libel and slander, and those kinds of things. It's called personal injury coverage. And we see more and more with a tenant turnover, or maybe somebody needs to move, or they can't afford a place anymore, or they're not paying their rent. They're starting to get evicted. Well, now they're getting nasty and they're countersuing and saying, wrongful eviction and things like that. Personal injury coverage. It's your best friend. It's very inexpensive. Make sure it's on all your policies. But in terms of covering flooding and making sure that, your tenants get relocated and they're happy, all your tenants should be carrying renter's insurance. So as a landlord, you have what's called loss of use coverage on your policy. And so in the event of a flood, your tenant needs to move out, your lost rent is covered. So because you're not charging rent to your tenant, you are actually not responsible for their relocation cost because they are not paying you rent.
Yeah.
So in lieu of rent, okay, we still have our agreement. In 60 days, the property will be ready. You can come back and resume your lease. But in that time frame, your tenants should have HO4 renter's insurance that will cover their relocation cost and any damage to their belongings.
Okay.
It's very inexpensive. It's typically $10, $15, $20 a month. I know landlords that purchase it on behalf of their tenants and just include it in their rent price. But that's how you make sure that those are covered.
Okay, nice. So again, we just talked about Mike Shehata the one goal is the one property a year. And guys, remember, loss of use coverage, make sure to get that on your...
And personal injury.
And personal injury. Actually, no, personal injury was your big one. So get personal injury insurance on all your rental properties. I didn't know that it's going to cover libel and slander. Yeah, because people are, they're nasty.
And we're in a sue happy place, so you got to be careful.
Yeah, you breathed on me wrong, we're going to sue you.
Yeah, exactly.
Well, anyway, Mike, it's been fun. And again, I want to just thank everybody out there for watching. Again, thank you for coming down. We're at the end of our show. Mike, I guess quickly, where can people find you online or find, Bethany Insurance?
Yeah, thanks for having me. But we're Bethany Insurance on Instagram, BethanyINS.com. Or if you just type in Bethany Insurance on Google, we'll pop up pretty high up there. We have a ton of Google reviews. Really just dedicated shout out to my staff who really do just a phenomenal job. And shout out to you for always being a trusted partner and working together, man. Thank you very much.
Thank you. And then, thank you, Mike. And thank you, everybody, for tuning in to episode number 4 of our podcast, guys, the Real Estate of Mind podcast. Catch you next time. Thank you, Mike.
Thank you.